we asked 4 pressing questions posed by investors to some of the top investment advisors in the country. Here is where these experts view the risks and opportunities in today's markets. What are your biggest concerns given recent market volatility?
My biggest concern, given recent market volatility, has to be the concern about contagion. We saw Treasury yields in a very short time frame go from 3.85 to 4.5%. High yield spreads blew out. You know, if you extend that another couple of days, and if the 10-year Treasury was crossing 5%, that's at a point where the markets are going to start to buckle. So contagion is my biggest concern.
The U.S. politics and some of the policies and how they're going to trickle down into the markets. I'm also concerned about commercial real estate and the amount of debt that needs to be refinanced there.
Clients' perception and how they react to what's going on out there. I think we do a lot of explaining to our clients to expect volatility, and we will have market pullbacks. But until they're in the moment, you never know exactly how they're going to react. And you just want to make sure you continue to have their confidence and their trust, and they avoid making some of those bad decisions or to be selling out at near market bottoms.
2 specific things. One, that policymakers are able to find a sufficient off-ramp from the tit-for-tat tariffs which are taking place on the international stage. And secondly, that investment decision makers take into context the starting points of where we have been. This year, when we came into 2025, there was a 20% increase in corporate bankruptcies even before the tariffs hit. So where we start matters. Similarly, in 2016, when President Trump introduced tariffs, inflation was in the 1.5 to 1.6% range. This year, when we started 2025, inflation was in the 3% range. So that leaves policymakers with significantly less wiggle room with which to implement changes.
The perceived lack of liquidity that's in markets. Markets seem to be de-levering and de-risking, and we are also in a day-to-day headline risk environment where the news of the day that comes out could have a meaningful impact on the market, not only for that day, but for several days after.